Welcome to the deep dive. Today we're getting into something quite a few of you asked about Trent Limited's full year performance for FY25 ending this past March.
Yeah, we've gone through the press releases, the board meeting stuff, their earnings presentation, and the financial review docs.
Exactly. So consider this your focused look. We're pulling out the really important bits from all that information.
Our mission basically is to cut through the noise and find the key trends, the growth drivers, and what this all means for Trent going forward. It's not just about the figures themselves.
Though the figures are pretty eye-catching to start with. I mean, 39% jump in standalone revenue for the year.
And 56% growth in their profit before tax on that basis. Pretty substantial.
Plus, if you look back since FY20, their revenues compounded at, what, 39% annually? That's serious growth.
It absolutely is. So let's dig into those financials a bit more. What really stands out overall?
Well, the consistency seems key, doesn't it? Standalone or consolidated, the picture looks strong.
Definitely. For the full year, that standalone revenue hit 17,624 crore. That's the 39% jump you mentioned.
Okay.
And the standalone profit before tax, before any exceptional items, was 2,077 crore. That's a 56% increase.
Right.
Consolidated numbers, very similar story. 18,141 crore revenue, up 38%. And consolidated PBT, again, up 56% to 2,030 crore.
So incredibly similar growth rates on both profit lines, standalone and consolidated.
Exactly. And even just looking at the last quarter, Q4, the momentum was still there. Standalone revenue grew 28% year on year.
To 4,334 crore.
Yeah, and the PBT for Q4 standalone was up 44% to 453 crore. Consolidated Q4 also showed decent growth, 27% in revenue, 40% of PBT.
And they mentioned operating margin improvements too.
Yes, for Q4 standalone, the operating EBIT margin was 9.3%, which is up from 8.3% in the same quarter last year. So better profitability on operations too.
Okay, so the financials paint a really positive picture. Now, a retailer lives and dies by its stores, right? What's the story with their physical footprint? They seem to have been busy.
Oh, absolutely, very busy. As of March 31st this year, they had 10,043 fashion stores. They call them large box format.
Large box meaning bigger stores.
Generally, yeah, offering a wider range of stuff within their category. And these stores are now spread across 242 cities.
Wow. An expanding reach.
Big time. They entered 64 new cities and towns just in FY25. A lot of focus, it seems, on Tier 2 and Tier 3 locations, getting beyond the metros.
And the actual openings and closings?
They opened 40 new Westside stores. But the big number is Zudio. 244 new Zudio stores opened in the year.
244. Okay, that's massive.
It really is. There were some consolidations too, mind you. 24 Westside and 24 Zudio stores were closed or restructured.
Still, that net Zudio growth is huge. So breaking down the portfolio now.
Right. So you've got 248 Westside stores, then 765 Zudio stores, and that includes 2 outside India in the UAE.
Zudio's gone international. Interesting.
Just a couple so far, but yeah. And then there are 30 stores under their other lifestyle concept.
And that adds up to a lot of floor space, I imagine.
Over 13 million square feet, just for the fashion brands. If you throw in the Star grocery business, it's closer to 14.9 million square feet.
Give us a sense of scale. Westside versus Zudio stores.
Sure. Westside stores are typically larger, maybe 20,000 to 30,000 square feet each. They're in 86 cities, total space about 5.4 million square feet.
Okay.
Zudio stores tend to be smaller, say 7,000 to 12,000 square feet, but they have that much wider reach, 235 cities now, including Dubai. And their total area is bigger because there are so many more stores, 7.9 million square feet.
Right. So Zudio is clearly the engine for expansion into those newer, perhaps smaller markets. How are the brands actually doing in terms of sales, Westside and Zudio specifically?
Well, the report says both have maintained a consistent gross margin profile, which is good.
Stable profitability per item sold.
Exactly. For the whole fashion portfolio, like-for-like growth, so growth in stores open for at least a year, was mid-single digits in Q4.
Okay, respectable.
But for the full year, FY25, it was double-digit like-for-like growth, which is strong.
That suggests good organic growth on top of the new store openings.
Precisely. And they also mentioned strong growth in specific micro markets where they've sort of increased their store density. Suggests that clustering strategy works.
And the big headline for Zudio.
Ah, yes. Zudio's revenues crossed the $1 billion mark in FY25.
Wow. Okay, that's a major milestone. Underscores its importance.
Absolutely. It's the key driver, really, through that value fashion positioning and just the sheer pace of store openings.
And Westside, still holding its own.
Seems so. Consistent margins, as we said. And they highlighted their loyalty program, the West Style Club, has over 16 million members now. It's a big customer base.
Significant engagement there.
And apparently their online sales volumes are pretty high compared to other standalone competitors in India.
Right, which brings us nicely to the digital side. How's their omni-channel strategy playing out? It's vital these days.
It is. And they say Westside.com and the Tata new platform are, quote, gaining traction and growing profitably.
Profitably is the key word there for online, often.
It often is, yeah. For Westside specifically, online revenue jumped 43% in FY25.
It's 43%. Nice.
And it now makes up over 6% of Westside's total revenue.
Okay, becoming a meaningful chunk.
And their approach seems to be about consistency. They're trying to align the online experience products, pricing, sales, returns very closely with the in-store one.
Makes sense. Less confusion for the customer.
They think it offers a unique convenience, and that they reiterate that point about Westside Online having high sales volumes compared to other standalone brands online in India.
So a solid digital performance backing up the physical store growth. Now, you mentioned emerging categories earlier. What falls into that?
Yeah, that seems to be beauty and personal care products, innerwear, and footwear.
Okay, expanding beyond just clothes.
Right. And these categories together now account for over 20% of Trent's total revenues.
Over a fifth. That's quite significant. Shows diversification is working.
It looks like it, tapping into other growth areas.
Okay, let's switch gears a bit to the Star business. The food, grocery, daily needs side. How's that part of Trent doing?
They seem pretty encouraged by the progress there. They've got 78 stores now across 10 cities, added 12 stores last year.
And performance.
Improving operating performance overall. Operating revenue grew 17% in Q4 FY25.
Decent growth. What's the strategy there?
A really big focus seems to be on their own brands. Things like Fabsta, Clea, Sky, and Star itself.
Right, private labels, higher margins usually.
Exactly. And they say own brands are now contributing over 70% of Star's revenues. It was 72% in Q4, up from 69% the year before.
70%, that's a very high penetration for own brand.
It really is, especially for staples, fresh stuff, and general merchandise. They mentioned their Smartle brand has an 81% share within general merchandise at Star.
Wow, so they're really leveraging that. Anything else on Star?
They launched a Miss Star app, presumably for customer engagement, loyalty, maybe orders. And the chairman's message did specifically mention applying the Trent playbook, the successful fashion retail strategies to Star, and express confidence in its future.
Sounds like they see real potential there, even if it's smaller than the fashion side currently. Now, managing all this growth, hundreds of new stores, huge sales volumes must put pressure on the back end. What about tech and supply chain?
Good point. They specifically called out a major investment, a full transition to RFID-based tracking for merchandise.
RFID tags on everything?
Across the entire fashion portfolio, yes. They said it's been a material enabler for handling the volume growth.
Which was over 40% year on year, wasn't it?
Exactly. Over 40% volume growth in FY25. So, yeah, you need efficient systems. RFID is used in their distribution centers and the stores. Should help a lot with inventory accuracy and efficiency.
Makes sense. Big undertaking, but probably necessary at that scale. Okay, shifting focus again. Beyond the numbers, what about sustainability, CSR? Companies talk about this a lot now.
They do, and Trent lays out 3 pillars: resource efficient, responsible by design, and people conscious.
Okay, what do those mean in practice?
Resource efficient includes things like using IoT, Internet of Things tech, to optimize energy in almost 400 stores.
Smart energy use.
Yeah, and getting about 40% of the power for 3 of their distribution centers from renewable sources, mostly solar.
Good. Responsible by design.
That seems to be about fabric traceability, using certified materials, and making sure their vendors meet ethical standards. They mention CEDEX, SMETA 4-pillar audits.
So supply chain responsibility.
Right, and people conscious is about employee well-being training. They clocked over 4,200 hours of health and safety training and over 22,000 hours on skill development last year.
Investing in their people.
Seems so. They also got a B rating from the CDP Climate Change Assessment for 2024, which indicates they're aware and taking some action on climate issues.
Okay, a recognized benchmark there.
Yeah.
And community work. CSR initiatives.
They mentioned a few partnerships, one with the Salam Bombay Foundation, helping kids with vocational skills. Over 360 students helped. Another called Karagar Clinic, empowering women artisans by upcycling plastic waste. They said it boosted incomes for about 125 women.
That's interesting. Practical impact.
Yeah. And employee volunteering is a big thing, too. Over 21,000 employees involved, contributing more than 76,000 hours.
Wow, that's a lot of hours.
plus support for education, like the Trent Scholars Program and the Non-Hikali Project for girls' education.
So a fairly broad range of activities on the CSR front. Now, back to the financials, just quickly the dividend. What are they proposing for shareholders?
The board recommended a 500% dividend. That works out to 5 rupees per share on a face value of 1 rupee per share.
500%. Sounds dramatic, but it's 5 rupees per share.
Exactly. It's based on the nominal face value, but still a significant payout. Of course, it needs shareholder approval at the AGM.
Right, standard procedure. If approved, paid out quickly after the meeting.
Usually within a few days, yes.
Okay, now, the chairman's message often gives a good strategic overview. What were the key takeaways from Mr. Noel Tata's statement?
He really hammered home the focus on growing their reach, making things more accessible to consumers.
Makes sense given the expansion.
And he made the point that looking at the full year gives a better picture than just one quarter, because retail is seasonal.
Fair point.
He specifically called out Zudio hitting that billion-dollar revenue mark in FY25. Big achievement.
He must be pleased with that.
Seems so. He stated that both Westside and Zudios now have real scale, reach, and consumer awareness. They're established players.
And his view on the Indian consumer.
That they're looking for aspirational products, but at good prices, and they want them easily available. Which sounds exactly like Trent's strategy, doesn't it?
It does. Plays right into the Westside and especially the Zudio models.
Right. And he stressed building density in key markets is crucial. Also sees huge potential for their online direct-to-consumer business.
And Star.
Mentioned applying the Trent playbook there and said he's convinced of its future growth. So optimism across the board, really.
Sounds like it. A positive outlook from the top. Finally, just to put all this FY25 performance in context, how does it look against the last few years? The presentation had some history.
It did. It showed the journey. I mean, Trent goes back to 1998 in its current form, but looking at the last 5 years or so.
Yeah.
Westside grew from 174 stores end of FY20 to 268 now. Solid growth.
Yeah.
But Zudio, wow, from 133 stores end of FY20 to 765 now.
That really is exponential growth, isn't it?
It absolutely is. And the financials reflect that. Standalone revenue in Q4 FY20 was 723 crore. Q4 FY25, 4,334 crore.
Massive jump. And a profit.
Even more dramatic. Standalone PBT in Q4 FY20 was just 7 crore. In Q4 FY25, it was 453 crore.
Okay, that historical view really highlights the acceleration, especially driven by Zudio in recent years.
Definitely. It paints a picture of a company that's found a powerful growth formula.
So let's try and wrap this up for you, our listener. What are the absolute core takeaways from this deep dive into trends here?
I'd say, first, really strong financial growth across the board. Second, massive retail expansion, particularly Zudio powering into value fashion in smaller towns.
Okay.
Third, their digital side is growing strongly and profitably. Fourth, the Star grocery business is improving, especially with that own brand push.
And underpinning it all,
A clear focus on operational efficiency, like the RFID rollout, and a stated commitment to sustainability and CSR.
and those big numbers, the 39% revenue growth, the hundreds of new stores, Zudio breaking $1 billion, they really stick in the mind, don't they?
They certainly do. It shows real momentum.
And thinking bigger picture, you have to wonder what this means for retail in India overall and how it fits into the wider Tata Group's consumer strategy.
Exactly. It raises those kinds of questions.
Which leads us to a final thought, perhaps, for you to mull over. Trent's got this multi-format approach, Westside, Zudio Star, online. They're firing on several cylinders. What could be the next phase for them? Where does this kind of growth lead?
That's the big question, isn't it? Feels like FY25 might be less of a peak and more of a launching pad for whatever comes next.
Definitely something to think about. And hopefully this deep dive has given you a solid starting point if you want to explore any of these areas, the financials, the brands, the strategy in more detail yourself.
Absolutely. There's always more beneath the surface.